And then this morning, we also heard from some companies that were talking about inflation, like sort of case in point. I was struck reading a lot of the releases this morning, how true it was, your morning brief, that all of these companies, yes, are talking about inflation. And you flagged one of them, Brian, Reckitt Benckiser, which is not a household name itself, but makes a lot of household name products.
Yeah, double whammy for them, suggesting that they will have to take up prices because they are in fact seeing high levels of inflation. And most important, I tweeted this out this morning, they are seeing Lysol sales slow. So a combination of higher inflation, slowing sales and products that we all stocked up on last year, and that's why the stock is really getting hit here. It deserves to get hit. It probably deserves to get hit even more as the street comes out here and lowers their estimates.
I mean, in fairness to them, and I understand, sort of what is driving the decline here. Are the analysts not covering this? Like, did people not see a slowdown for Lysol coming? Am I missing something here, that the expectations weren't supposed to have been already right-sized for a slowdown in the stocking up of a Lysol product? I think
the street has modeled for in consumer products, and we'll hear more about this from Procter & Gamble when they report earnings. But we heard it from Kimberly Clark last week. I don't think the street. They've modeled for a slowdown, but not outright plunges. And I think that's what you're starting to see in terms of these consumer products company. And two, it's also very hard just to estimate these high levels of inflation when you're a Whirlpool and you're still calling out $1 billion of extra inflation. How do you even project that into your model as an analyst? It's very hard to do.
Other companies out this morning, I'm just going through the conference call transcript from Stanley Black Decker, of course, the tool company.
Friends of ours.
It looks like 11 mentions of the word inflation on that call. The stock is down about 3.7%. Commodity inflation specifically, $260 million worth of commodity inflation in the second half. The prior assumption, $210 million. A lot of that is steel going up. So that's an issue, too, and that the company is going to see, in particular, steel price cost this year of $300 million. So that's another company that is seeing some problems from that. It is said that the company also said it's tried to offset that with sort of product mix shifts, but maybe not being entirely successful.
Well, I think as an investor, you're going to get an opportunity to come in here and buy some of these companies here on weakness because of concerns about inflation. And you look at a Stanley Black & Decker, it is a company I've followed closely for 15 years. They have just an ingrained culture inside of that company of slashing costs, driving productivity, and you get the sense that company could overcome high levels of inflation. And they did so in the quarter. Their tools and storage business, margins up, industrial business, margins up significantly. It's likely they will find more areas to cut costs and overcome this inflation.
Well, look, we talked to the company not too long ago, and they discussed mostly the trends that we're also seeing brought up here on the earnings call, talking about strong demand drivers and support for tools growth, including the secular surge in consumers love this reconnection with the home and garden. But
you've been reconnecting with your home and garden.
I'm connecting for the first time.
You have a garden?
Yes.
You have a garden?
No.
You have a lawn.
I have a lawn,
you have
and I
plants,
have a large collection of weeds in the back.
That's your garden. It's your weed garden.
It's a garden of sorts. Dump the lawn clippings back there. But you kind of have this dual story then for a Black & Decker, and I think a lot of other companies are going to fall into this as well, where the demand, the fundamental setup for Black & Decker's product line probably hasn't been this strong in a number of years. Really, if ever, if you combine the pro market with the consumer market, and yet with the kind of commodity cost inflation they're seeing on their supply side. I mean, storage sales up 46. This is Black & Decker. We're talking about sales up 46%. That's just not the kind of thing that you see in this business. So to square these two, and I think for investors and for executives themselves to make sense of it is really the challenge of the moment.
So here's another one on that same front. How many houses in your neighborhood have a little painting sign out front?
Oh, they're getting painted?
Getting painted, inside or out.
I've seen a lot.
No, and I live in a co-op.
So many. Maybe they're painting the inside in secret.
Not my place.
In the suburbs, people like to advertise what the contractors like to advertise what they're using.
There are town rules for me around
that. Which brings me to, though, Sherwin-Williams, which is also out with its numbers this morning. The company's earnings per share actually missed estimates, but the company stuck with its forecast for the full year. And here again, the CEO, John Maurikas, on the call saying we had solid performance, but he said along with the strong demand, we also implemented pricing actions to offset the significant sustained raw material inflation that pressured our gross margin in the quarter. So once again here, that word cropping up.
I'll throw one flag onto the field here too. They're also calling out, and this is the first time I've heard this probably in a year, weakness in DIY sales. So people at home, they bought a home last year, they probably painted their kitchen, painted their living room. Those sales of those paint products were weak. If you're out there trading a Home Depot and a Lowe's, I'd be a little more cautious today on Home Depot and Lowe's on that setup into earnings off of what Sherwin-Williams said today.
Interesting.
Can we have a conversation about painting not being the easiest project? I feel like people don't talk about that enough. People are like, oh, you can paint a room. No big deal. Just go buy the paint. It's fine. Painting is hard.
Painting
is very hard.
I've never tried to paint a room, so
really?
Have I?
I don't recommend it. Don't start now.
Okay, Myles Udland's tips for the homeowner.
You think you're like it's going to be fine, and then it takes all day, and you could have hired someone and they'd do it in an hour.
Yeah.
You know?
Definitely. It's not easy.
I value your time.
That is.
It's fun. It's fine. There's a satisfaction and all this stuff. It's hard. So maybe that's what consumers learned. Yeah. They were forced to paint their own homes.
Painting's awful.
During COVID. And so that market, they then realized it stinks.
Yeah.
Or, you got to start with the cut-ins, you start with the trim, all the boring stuff.
Right.
The fun roller, that's 10 minutes at the end.
It may be good training for karate, but it is not very...
Fair enough.
Sorry, that's Karate Kid reference.